Welcome back. Let's get the fundamental conversation going. We have Prakash Diwan joining us on the show this morning. Prakash, always good to have you on. Hope you had a good festive weekend. And I'm actually going to go back to the stock that we were discussing on more a day. I'll start from there because we want to discuss your take on the auto numbers. And once again, it's Mahindra & Mahindra standing tall, 20% growth when it comes to their passenger vehicle business. And even tractors have started firing in. Now, what about the stock? It's already had a dream run in the calendar year, but it is off about 10% from the peak. How much more on a Mahindra & Mahindra? And would you still advise buying in now at these levels? That's the question.
Good morning, Survi. That's absolutely $1 million question. What do you do with a stock that's performed so well over the last couple of years, has done well even in this year? And there's still, this doubt that people have on whether, this rotational change, the sectoral rotation that you see in the markets typically on closer to peaks, will autos be out of it? Now, my sense is if you look at the numbers, they are in sharp contrast to what the Bajaj Auto management commentary was, right? The anticipation was probably they were trying to manage expectations and, people read it as a caution. But numbers tell you that buying has come back, especially the two-wheeler side. What's interesting about the M&M numbers is I'm not surprised at the bump up that they've seen on the SUV portfolio. That was bound to happen. They probably lead that portfolio by a decent margin. People haven't been able to compete as much. It's the tractor segment for me, which is the most interesting, which has seen a pickup after a fairly long gap. And seasonally, of course, this is a good month to start looking at improvement there. My sense is if that happens, you could probably, the second order effect is look at Escorts Kubota. That is a stock that also kind of rallied, lost some ground, has come back to a level where it could probably, do some tactically for the next 6 months, it could probably outperform a lot of the other auto names. On M&M especially, I think each of the businesses is waiting to kind of start scaling up on its own. Whether it's the EV portfolio, and remember, they're going to be launching the EV3 or whatever that new series of portfolio vehicles that they have this year. So in 25. So if that were to do well, they'll start competing in that segment very, very aggressively.
Sure,
so M&M has got more sum of parts kind of a thing. There is room, but it'll probably take some time. But Escorts is what you need to look at.
Anything else? Hero, because the two-wheeler guys, like you're saying, TVS has done well, Hero has done well. And I don't know, would you be a contrarian at all? They say you have to buy great businesses when the tide is, not high, all of that. So I don't know. Maruti or even a Hyundai, I don't know. None of the numbers are going in their favor, but would you buy now?
No, I think rest of the names have a valuation, don't have that kind of valuation comfort, and especially because most of the good stuff is priced, especially two-wheelers. They'll have to continue doing well to justify where they are. So you'll probably start seeing things happen after Jan. And, this is a market, phase of the market, so where you will probably get very good entry points, is my sense, till about Jan, Feb. So I'm not in a hurry to add anything new unless it's compelling enough from a valuation perspective.
Hi, Prakash. Good morning. What's the view on NMDC? Finally, the dispatch numbers are looking better in October. They were disappointing the previous few months for a whole host of issues, whether it was rains and some environment clearances as well didn't come, regulatory clearances didn't come about. But your view on the stock?
Good morning, Nigel. So I think it's definitely, let's look at what could happen on the metal side, on the ferrous side, that is, globally. And if the China demand continues to remain up, and if there is this whole anticipation of a stimulus and a higher stimulus, I don't see any reason why the metal rally will sputter out. And from that perspective, ores will continue to do well. In fact, there's always this lag. And we've just started seeing, iron ore kind of come into that phase where it has started matching up or trying to catch up with the underlying metal prices. So my sense is NMDC is very favorably poised. It's just that execution of some of the, expanded capacity is something which could take longer than what you anticipate. And if that doesn't kind of come in the way, you'll probably see a very nice secular uptrend going into the next 6 to 12 months. So quite positive on that. And there is valuation comfort in this case. There's nothing that you're overpaying from a price to book or even the price to earnings growth kind of a model. So my sense is NMDC does make sense for, in fact, these are times when you buy these kind of stocks which are boring, which are slow to grow, but they do grow. So look at that. No fireworks, but yes, very powerful.
Okay. I don't know if you managed to hear that conversation that we had with Paras Defense. I mean, the company sounding very, very optimistic. Numbers have been showing up as well. Now, defense was a great theme till we got into the midst of this October correction. I don't know. Do you see it coming back anytime soon? If not defense, if you sort of widen that to other PSUs, would you look at anything today? For instance, some railway stocks are reporting today. We'll hear from IRCTC and IRFC. The numbers are today.
Surabhi, what happens is when smart money pulls out of these high-valued sectors or themes, it starts looking for value in other sectors and themes. I doubt if defense has come back to a stage where it offers value again. There could be growth, there could be, and hence there could be momentum at some later stage. So to answer your question specifically, I don't think railways and defense coming back so distinctly so soon. It could probably happen only middle of next year when the earnings start justifying that. Because Paras, for instance, I mean, with the 87, 88 crore quarterly run rate, it could do well in the next 2 quarters. But still, end of the day, you just have about 101 P multiple. So that's quite stretched. I would look at things much later. The rotation will get you much of, what Mr. Damani mentioned. I think some of the names like Protean, governance and all of that are so promising. He didn't name it, but all the businesses that he described are residing in that name. Look at some of those names, NPST. These are names that you could look at from the next wave of growth much more safely as compared to defense.
Okay, all right. Prakash, before we let you go, I want to understand what's your view on Welspun Corp. The stock went very, very close to around 800 rupees, and then it came down to around 700. It's been in a bit of a range, but earlier, around an hour or so ago, they won an order of around 1,300 crores. That builds on to another 2,400 crores that they won in the United States just a month or so ago. So now United States business that wasn't firing for them is going to look blockbuster in FY26. What's the view on the stock?
No, I think you're right. I just read about this new order that came in the morning. But, would you really wait for the US tariff, potential tariff, revision announcement after the presidential election outcome is known, and then buy it or not? That's the question. But their order book, as you rightly said, is very clearly in place. And the worry is now only beyond FY26 what goes through. So from that perspective, there is some room for growth. The price hasn't adjusted to this new reality or this new salience. You could probably see at least a 15-20% kind of this thing. It's a great stock to add on dips. The management also has envisioned a huge expansion for all its businesses, including Wellcop. So I think it's quite positive. If you're okay with the run-up that's happened in the last 1 year, don't look at that. Look at what could happen going forward, and it definitely seems to be a market outperform.
Okay, all right. Got that, Prakash. Thanks very much for that. I think